What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leverage bullish semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you hit that subscribe button and that notification bell. That way you're notified whenever we release new videos. We do release videos Monday through Thursday and once on the weekend. But we do release the bonus content from time to time, so make sure you've got that notification button hit. On today's agenda for the video, we're going to recap today's intraday price action and look at the QQQ internals. We'll take a wide view of SOXL's price action from the week, month, quarter, and year. And then we'll look at the market maker's expected move for tomorrow, Friday, September 19th. And we'll set our four-hour markers and our triggers and targets for tomorrow. And then do a quick review of the triggers and targets for the week, month, quarter, and year. So looking at the charts today, again, we're just going to go to the smaller charts with SOXL price action in the upper left, vol QD in the lower left, the tick in the upper right, and the ADQD in the bottom right. So we've got money coming in versus money going out, and then breadth measures here. And we can see that we opened, excuse me, we opened at this 3276 level. So what we like to do a lot of times is take and draw Fibonacci's from the open of the current day to the close of the previous day. So it gives us some better levels to work with from an intraday perspective, instead of just going from the high of the last candle of the day yesterday to the open or the low, or whatever, however other people may measure out the gap. This is how we like to measure it, and it gives us some pretty useful Fibonacci extensions, right? So we've got the gap, and we're looking at what we could go to if we get a gap and go. And so you can see here's the top of the Fibonacci's, and we have our extensions here, the 138, 150, and 161.8. So we've got again, opening price action. We've got a higher low from the 5-minute perspective, right? Excuse me. We get the push down. We get the bounce off of this 161.8 fib extension from the high to the low of the 11-week range that we were in. So you can see we bounced basically right off of that, and we started to push higher, getting higher low here. Now we did get this phantom print. I'm not sure what that was about, but that was just a flash, like literally a second that we got this wick. So didn't count this as a lower low in that case. Needed to just kind of watch price action and feel out what really happened, what was going to really happen. And you can see that we did, to cause that flash down was the rejection off the 138.2 fib extension. So you can see how that comes into play. And then you can see that the push up went to the 150 extension before rejecting. We did get the pullback below the 138.2 fib extension, but that was a higher low, what I consider to be a higher low in the 5-minute time frame, right? Not counting this, I guess I'm going to call it a phantom wick. And then it pressed up to the 161.8 fib extension. And then you can see for the rest of the day, we kind of went back and forth in between those levels. So just another way to kind of look at the charts from an intraday perspective and find levels for scalps and whatnot. We did take the higher low on the 5-minute. Again, we did not recognize this as being a lower low, so we went ahead and wrote it up to the higher low here. And once we got the higher high, which was basically an equal high, we did scale out. We did leave a runner. We left that to run overnight as well, because we didn't get a real big pullback below the 138.2 fib extension. Now we did close just barely below it, but we still consider that to be a pretty strong day. So if we look at the bigger chart, right, we can see we've got the good action, and we have created somewhat of a downtrend, right? From the 15-minute, from this high to this high, did create a lower high, and this did create a higher low. So it tried to start a downtrend. It did create a lower broadening formation, but it did create a higher low here. So it was more consolidation into the end of the day than a real downtrend. But we do want to have these markers out here, again, the broadening formation and then the higher low line that did reject at the price action at the end of the day as well. So that's what we've got from the intraday price action. Let's go ahead and Let's go ahead and zoom out here a bit. Let's bring up a different chart. Look at things from the day perspective, even just the 4 hour first, right? Because that will influence what we do tomorrow morning. We did get, we closed with a 3 or a bullish engulfing candle yesterday, and we got the 2 up. So we did want to watch out for the 3, 2 up, 2 down reversal. Very clear entry here at the low of the 2, very clear exit at the low of the 3. So we did want to watch for that, but going back to the internals, excuse me, you can see they were on fire, right? Vol QD by, excuse me, 10:30, 11 o'clock was in trend higher zone. The tick opened in trend higher zone and stayed above the 0 line basically all day. 80 QD opened up in trend higher zone, so there was no real reason to think that we're going to actually get the 3, 2 up, 2 down. The close being a 1 or an inside candle, even though it's red, I still look at that as somewhat bullish because it closed in the upper half of the first 4 hour candle. So, not the most bullish thing in the world, but I don't see that as being bearish. Now, the one thing that we do want to keep in mind is we're right up against this daily broadening formation, and like I said yesterday, excuse me, on yesterday's video, in order to get through these broadening formations, the daily, the weekly, and this daily broadening formation, as well as the market maker's expected move high, we might need to get a gap up, and that's what we got that jumped over those broadening formations. But we do still have this one left to defeat, and so we'll see how things react tomorrow. We've got our market makers expected move high and lows. We'll go over that here in a second, but you can see that the trading range isn't enormous. We did reach like 15% gain at one point today at the underlying ETF SOXL. So pretty big day today. It's kind of hard to follow those up with another 10-15% day. But again, we'll see what happens. Again, from the day perspective, we have the 3, 2 up on the day now. So we do need to watch if we do get price action below today's low. That triggers the 3, 2 up, 2 down. We would enter puts at this level. Ultimate target would be down here. Again, we're in an uptrend. There's a lot of momentum and money flowing into the market. Breadth is pretty wide. I don't know that we would hit that low, right? But that's what the strat would call for. We would take those entries with stops and put in place to minimize any loss if it did turn around right at the beginning, or to capture any profits that we have if once the price does start going in that direction. If it does reverse before it reaches this ultimate magnitude, excuse me, those stops that we continue to move down, we'll go ahead and capture that profit for us. So looking at the week perspective, let's zoom out, get a little wider chart here. We're handily enforced with the 2 up, 2 up, right? Making a higher high, and we've already made a higher high compared to this high back in the early pull down of that we had earlier on this year. So we are striving to reach another the next highest high here. So along with other levels that we have on an intraday perspective, from a wider time frame, we are looking to try and hit this 36.15. So 33.64, we hit 34 something today as well. So we're not too far from making that higher high. If we do make that higher high, we can look for a reversal, because that does coincide with this weekly broadening formation. And even if we don't get a reversal, be looking for at least sideways action. Maybe we get another 5 or 6 week range to the side like we did here. This was, of course, 11 weeks, but hopefully it wouldn't be that long, and we could go attack, maybe this gap on the day perspective. But everything's looking good from the week. From the month, again, we are, get the month going here. Again, we are, better equipped to not get that 3, 2 up, 2 down next month, right? So early on in the month, before we were really pushing up, we wanted to make sure that if we did go 2 up, that it was, with momentum, in force, and not pulling back within last month's price action. If it does pull back within last month's price action, then we could be looking at a 3, 2 up, 2 down. Again, not a lot of magnitude with that move. Really, just looking to kind of close this gap and possibly bounce. Would it be a bigger part of a smaller part of a bigger move? Possibly. We would assess that after we close that gap, if we do close it. But you can see just going a little bit past that 3, which would be the magnitude for the 3 2 up 2 down, would close that gap. And who knows, we could always bounce off of that gap again. It's been there since June, so there's been plenty of time to fill it, and even when we did attack it, it bounced off of there. So from the month perspective, still looking very strong. From the quarter, we're getting there, right? This is the that second higher that we were talking about on the week perspective, that 36.15. That's the magnitude of the 2 down, 2 up on the month move, right? And if you're not familiar with these numbers that I'm calling out, it's part of the strat. It's a method that's been out there for some time. It's a proven and repeatable strategy, which is really the base of our trading and charting method. With our nuanced layers put on top of it. But for more information about the strat, it's again one of the easiest ways to learn about price action. Check out the description of this video. It has a link to a free PDF that gives you a diagram of the basics of the strat and reversals and how broadening formations are used. And then there's also the link to Rob Smith's YouTube page. He's the inventor of the strat. He's no longer with us, but all of his videos are still up, and they're a wealth of knowledge. So if you're interested in that, go ahead and check that out. But getting back to this video, excuse me, we've got the 2 down, 2 up, hoping to reach magnitude. And if we do breach magnitude, what that does is give us the 1 combo 2 down, 2 up, and that would give us a target of the high of the candle to the left of the 1. So this 3 here, which is 70.08. Which is last year's high. That would be the magnitude for that 1 combo 2 down, 2 up move. It probably wouldn't happen in a month. It would probably take multiple months to get there if it does happen. But that would be the target for that move. So not saying that that's going to happen. We're not in the business of predicting. If we get there, we'll see what happens when we get there, and we'll be ready with our triggers and targets at that time. But just kind of talking about what could happen. Now, from the year perspective, things are looking way better, right? We had the 1 2 up 2 down trigger on the year. It almost reached magnitude. Magnitude was 621. We got to that 723 back in April, but we've been able to hammer back up and not only create more of a hammer, but a green hammer, right? So price is above where it opened the year, right? So we're back above that year flip. That was the top of the range, that 11-week range that we were in. So if we look at, let me go to the week. If we look at the upper left-hand part of the page, we can see the time frame continuity. The week, the month, the quarter, and the year, they're all green. So that gives momentum to the bulls. So the longer we stay above this 2813 level and stay green on the year, the better chance we have of finishing the year green and triggering the 2 down, 2 up next year, which would target the high of 2024, which is at 70.08. So that's how we're looking from a higher time frame perspective. Things are looking very good for the bulls. What we'll do now is get into our market maker's expected move. And so to do that, we pull up our options chain for this week, and this is Thinkorswim. If you look at the options chain for this week, this Friday, September 19th, 2025, we can see that there is an expected move of plus or minus $1.54, right? So if we go to our notes and we look at, okay, we've got our market maker's expected move of $1.54. We look at today's close price, and that gives us a range for tomorrow of 35.18 to 32.10. So if we go to our, back to our charts, and we look at tomorrow's information, we can see that the market maker's expected move, we've closed up here, is up here at 35.18, and the low is down here at 32.10. That is in the gap. So we've talked before about half gap reversals. Could that be a point of reversal to come back up? Not, it doesn't necessarily have to be exactly at 32.10. Do we get somewhere around 32.10, 32 even, 31.90, something like that, halfway through the gap, even this 31.85, and then bounce to come back out of the gap? That's a very good possibility. We've shown how in the past how it's happened multiple times. So be on the lookout for that. If we do get a push down tomorrow, if you do enter those puts on the 3 2 up 2 down reversal, just be aware that even the half gap can be a reversal point. If not, then of course we're looking for that gap reversal, and then the continuation of this strat which has a magnitude down here at the 29.14, which is the week open, or the opening print for the week. Now, this 29.66 and 29.61, this green line and this purple line, this purple line is last week's high, and the green line is last month's high. So if we push through the gap and continue to go down, do we find support there before completing the strat to give us a higher low on the 4 hour and bounce back up? It's again a very, very good possibility. So we have those levels marked out for a reason, and we'll continue to watch price action. Tomorrow, if we get a break to the downside, we'll know to watch that level for a possible reversal. So that's the market maker's expected move. Again, 35.18 to 32.10. You can see the range that we have there. So just depending on where we open up, those could come into play or could not. Let's go ahead and look at things from a scalping perspective, setting up our triggers and targets for tomorrow. All right, so again, we've got our, let's bring this in a little bit. We've got our 4 hour markers on the board, right? So previous high a day. I have not moved my overnight highs and overnight lows, right? But overnight high, previous high a day, previous low a day. Let's go ahead and move those just so we can illustrate this properly. All right, sorry to drag the video out a little bit, but this does, this is important to our repeatable strategy, right? So we want to make sure we get it put into play. So we will move our overnight high to today's overnight high. What is the overnight high so far, at least? And you can see we're pushing to highs in the overnight right now as we speak. And we'll take our overnight low and we'll move it up here to today's overnight low. All right, sorry about that. Let's get the video going back again. Take off our extended hours, right? So if we look at things from a 5-minute perspective, there we go. So we've got our previous high a day, overnight high, overnight low, and previous low a day, right? Then tomorrow when we open, we'll get our opening print, and depending on where the opening print is where we set our targets, right? So let's say we open up right here at 33.71. If we get price action to the upside, and say it hits this 15-minute lower high line, or hits this fib extension and gets a little bit of reversal, if we do get a higher low above opening print, then we want to enter calls. Our first target would be overnight high. Second target would be previous high a day. That's just from a scalping perspective. Now, does that give us a lot of magnitude? Not really. So you want to think about if loading up on contracts, making sure you are at the money or in the money, so you're getting as much delta as you possibly can. If we do get price action, we open here. If we get price action that goes to the downside, say we get a bounce off of overnight low and we come back up and we get a lower high underneath opening print, then we want to enter puts. First target being overnight low. Again, not a lot of magnitude, but the second target is the previous low a day. So you've got a lot more to work with there. Now, again, you're working against momentum, and we're in an uptrend, and you've got a 15-minute broadening formation as support here. You've got the fib from the gap and go here as support as well. So could we get a bounce here? Yes, but the ultimate target for that move would be previous low a day. Again, that's just a repeatable strategy. You lower highs underneath opening print, we're getting puts. Higher lows above opening print, we're getting calls, right? Now, if we want to look at things from a more of a day trade swing perspective, let's go ahead and bring up our other chart, right? So from a 4-hour perspective, we do have the 2 inside 1, so that allows for a quote-unquote reversal from a strat perspective, both to the upside and downside. And what that means is we have a very clear entry and a very clear exit, right? So if we go 2-1, 2 down tomorrow, so if the price action in the first 4-hour candle of tomorrow goes below the second 4-hour candle from today, then that's a 2-1, 2 down. We're entering at the low of the second 4-hour candle from today, and the exit is the low of the first 4-hour candle from today. right? So very easy entry and exit. Entering at 33.42, exiting at 32.43. So almost a dollar worth of move to the downside. So you can see how if you're at the money, in the money, multiple contracts, that can net you some pretty good profit. And then we look at either the possible bounce off of the gap, or we look for the half gap or gap fill, right? So maybe you exit a majority of your position here and leave a couple runners and look for that gap close, right? To the upside, we get the 2-1-2 up, entering at the high of this candle, exiting at the high of this candle, at least for a majority of your position. Now, again, that's not a lot of magnitude. So we want to, you would enter at 33.95, exiting at 34.14. Then you might maybe want to leave some runners and look for that, at least the market maker's expected move high of that 35.18. Go over here to our notes. So we've got here in our notes, again, we've got a new gap below us, right, that we put on the chart, and we've got the $1.54 expected move for tomorrow, giving the range of 35.18. We know what it would take to flip the month, the week, the quarter, and the year red, but that's quite a ways down, so we're not really worried about that right now. From the 4-hour perspective, again, we would have a 2-1-2 down, triggering at 33.42, magnitude of 32.43, an extended target of 32.10 and 31.85. The triggers for a 2-1-2 up to the upside triggers at 33.59, and with the magnitude of 34.14. So not a lot of magnitude there, but we do have the extended targets of the 34.42 and the 35.07. Those coming from those fib extensions that we drew from the gap and go. Now looking at things from the day perspective, right, we've got the 3-2 up, watching for the 3-2 up, 2 down. So if price action tomorrow goes below the low of today's, which was 32.43, then we would enter puts, targeting the low of this 3, which is 29.16. So that's a pretty big magnitude there. Would it happen all in one day? If it does happen, possibly, but can't always count on that. So you could be looking at a 3-2 up combo, 2 down, going into Monday, right? If we go to the upside, that's just a 2 up, 2 up continuation. So there's a very clear entry, but you've got to use other levels that you have taken note of as your exits. You don't have, like with the reversal, the very clear exit and very clear entry and very clear exit, right? You got your very clear entry. If we go above 34.14, obviously we're entering calls, targeting at at least the 35.18, and then with the fib extensions that we had on there, we've got 34.42, 35.07, 35.43, right? So 34.14 is the high, triggering that. Target 34.42, 35.07, 35.43. Now if we go 3-2 up, 2 down to the downside, it triggers at that 32.43. The target, I guess I didn't fill that in properly. We have the gap close of 31.25. Sorry about that. And then we have the open from today, from yesterday, which is 30.28. And an ultimate magnitude of 29.16, right? All right, so sorry for the sloppiness on my part. So if we get the 3-2 up, 2 down, it triggers at 32.43, but because the magnitude is so great, we want to have a couple of targets on the way down. Those are the 31.25, 30.20, but the ultimate target is 29.16, right? So there's our triggers and targets to the downside and the upside for the 4-hour and the day. We already went over, what the 4-hour markers, how those turn into targets on the scalps. So from the week perspective, we're still in force in that 2 up, 2 up. That triggered at 29.61. We've reached 3 of our targets, so we've added 3 more, 34.42, 35.07, and 35.95. So we'll see how that goes. To trigger, the red 3 or the bearish engulfing candle, we've got to get all the way down to 26.57. So I'll just call it right now, we're not going to see that happen this week. So that's probably the only prediction you'll hear me make all year, but I highly doubt that happens. For the month, again, we're in the 3-2 up, triggered at 29.66, reached our target of 30.55, actually reached these targets as well. So we've got the 34.42, and then we can add these extended targets on there as well. All right. So looking good again from the month, from the quarter perspective, 2 down, 2 up, triggered at 25.84. We're almost to that magnitude of 35.16. If we do, we've got the extended targets from here, the month, but from the quarter perspective, the 38, 42, and 44 would be greater targets for us to look for. These just being targets in between those. So actually, those aren't even high enough. So forget what I just said about that. We just got our extended targets, right? For the year, looking to go green 3, but that's not going to happen. That takes 70.08, and that's not going to happen. So there's our triggers and targets. Hope everybody's enjoyed this video. As you can hear, I'm a little bit under the weather, so I try to get these out here, get as much information as I could out there. Apologies about my voice, but I do feel that this information is important. Even though I'm a little sick, I'll probably still be playing a little bit tomorrow. If you know me, I don't play too heavy on Fridays anyway, but if anything triggers, then we'll take it and we'll look for those targets. If you would like any more information about anything I've talked about in here, please let me know in the comments. If you think I can do anything better in my videos, please let me know in the comments as well. Hope everybody gets a good rest tonight, wakes up refreshed tomorrow, and I wish everybody good luck tomorrow's trading.